Hello, my name is Morgan Hart. I'm the Managing Director of ASX listed gold mining development company, Emerald Resources. I'd like to firstly thank 121, the organiser 121, for allowing me to present here at this forum. Emerald is currently developing its 100% owned 1 million ounce Okvau gold project in the Kingdom of Cambodia. The company is fully funded to build the US $100 million Okvau development, and significantly, we're approximately 50% through or halfway through that build, with first gold expected on time and on budget in the second quarter of 2021. So to the compelling question that we all ask when looking at new investments, why invest in Emerald in this particular case? Primarily, what I'd like you to take away from this presentation is that Emerald has a great project. It's a 2 gram per tonne single pit operation with a 906,000 ounce reserve with plenty of potential to increase in size. It's very rare to find 2 gram million ounce projects anymore in single pits. You basically have to go overseas to a new jurisdiction like Cambodia to do so, which obviously Emerald has done. The project has outstanding economic potential in the current strong gold price environment. And last, the Emerald has the right team to build the Okvau project and to build the company. The board and management at Emerald have all done this before together successfully. In particular, we've built 4 gold mines in the last 15 years. This will be the 5th overseas and in Australia, and we are on the way to bringing Emerald into the ranks of new producer. So specifically, gold production is on schedule for Quarter 2 2021, as I mentioned before, on time, on budget. We're fully funded with the full 98 million plus contingency raised in debt and equity over the last 12 months. We have a 100,000 ounce per annum or plus 100,000 ounce per annum gold producer coming into the ranks by mid-2021 with an all-in sustaining cash cost of just over $750 per ounce. As you could expect, with a plus $1,900 gold price US and a $750 plus gold cash cost, the project will show very strong economics. Using a gold price of $1,700, we have a very high NPV of $486 million and IRR of 95%, both pre-tax. With a 1.1 million ounce resource, of which 900,000 ounces has converted to reserve. The huge in potential for increasing that reserve and resource, because the project's under-drilled outside that the extent of the actual open cut depths. We'd expect it to continue along strike at depth to the south and to the east, and to the eastern side and north, with further drilling out of cash flow next year. The board and management team have successfully done this before in Africa and Australia. We're aligned as large shareholders in the company. That shareholding obviously motivates us, along with all other shareholders, to add value by increasing production through mine developments and exploration. We have substantially de-risked the project in Cambodia. There won't be too many people that have had investments in Cambodia in the past, but we were very keen before we started building this project that we fully understood the risks and minimise any risks going forward in the new jurisdiction. To that end, we own 100% of the project in Okvau, which is different to many of our peers around Southeast Asia and Africa. We were very keen, and the government allowed us to write a mineral investment agreement, or a direct agreement governing the project's operation and development. In that mineral investment agreement, we have agreed offshore arbitration in the case of dispute with the government, and a standstill on law provisions, which protects us from any change in law affecting the economic viability of the project itself or ownership. Political risk insurance is readily available in Cambodia at sub 1% premium, which is very low premiums, which gives you some indication that the international underwriters aren't concerned about political risk in Cambodia. All of our contracts and operating currency in Cambodia is in US dollars. We have freedom of banking onshore and offshore. So Emerald at a glance, we have a market cap of about 320 million Australian dollars. We have 515 million shares on issue, a very low amount of options, 8.8 million options on issue. They are all to key staff, obviously incentivising them to work for shareholders. The The company has a very strong shareholder structure in that we have institutional investors, both Australian and institutional investors, holding nearly 50% of the company. Directors and management own 22%, and that directors and management team has bought their position in Emerald. We haven't been given it as a bonus stock or options along the way. Board of management team is led by Simon Lee as a non-executive chairman, who was formerly the chairman at Equigold, Samantha Gold and Great Victoria Gold, three very successful companies. Myself, I was originally the COO of Regis Resources, and prior to that Equigold, two successful companies that the success came off the back of mine developments. Mick Evans was the Chief Development Officer at both Regis and at Equigold, and was responsible for the last four gold mine builds in three at Regis and one at Equigold. Mick is on the board at Emerald as its Chief Operating Officer. So the most important aspect of value creation at Emerald, that being at present the construction of the Oakdale Gold Project. As you can see here, despite the worldwide effect of the coronavirus pandemic and the seasonal Southeast Asian wet season that we're working through at present, we've achieved significant progress on site. The photos starting in the top left show the advanced construction of the grid power facilities to site, including the substation. Grid power lines are complete to site, and the substation is scheduled for commissioning well in advance of power requirements for the project startup. Below that site, civils and concrete works are progressing on schedule, with an escalation of works expected in about a month's time when the onset of the dry season. We've been working through the wet season at present. On the right-hand side, the photos there are reflecting our mining contractor, ASX listed Macca Mining, who mobilised over half of their equipment to site already, with the rest of their gear expected to turn up before commissioning. Macca and the Board of Management of Emerald have a long association of working together successfully, and Macca has certainly shown his commitment to this project by mobilising on time and to meet the mining schedule straight off the cuff. That's on-site progress. Off-site progress, obviously, in the engineering shops around the world, predominantly in Southeast Asia, where we are seeing a very, very unique situation in Southeast Asia, that because of the onset of the coronavirus and the impact of the coronavirus, there are many shops in Southeast Asia with high-quality engineering capacity that have very low amounts of work but high potential capacity. So the shops are open, but there's very few jobs coming through. So you can see here, that's obviously an advantage to us in that our work becomes a priority both in costing and in timing. So you can see here from the photos, the SAG mill shell on the right, top right, the SAG mill heads, top left, nearing completion. The girth gear in the centre of the screen's been engineered. The the jaw crushers complete, ready for pre-assembly. The bolted tank plates are all complete and are being shipped to Cambodia as we speak. The elution columns complete and ready for shipment, and the mill motor and gearbox are complete, ready for shipment, amongst other components that obviously in other shops around the world. So how best to illustrate this and how far we are through the build? Well, I like to do it by showing you the actual spend and committed spend on the project itself. So you can see here in the bar graph, the light blue is actual expenditure, money out the door. The dark blue is committed expenditure, so jobs that we have committed, a full build on, and effectively the light blue just shows you how far we are through those committed stances. So if we look at the top line, the bulk site earthworks, they're 70% complete, which you would expect us to be about 70% complete about this time in the process. If I look down further to the offsite fabrication, it's over 60% committed. If we look at the SAG mill contract, which you saw many of the photographs on that last slide, it's over 90% committed with about 75% spent. That's why you're seeing all of that equipment basically sitting in shop ready to ship. And the power supply is over 80% committed and spent. So the final line there shows, the highlighted line shows the total of all, where we are about 40% money out the door, or just under 40% money out the door completely spent, and we're committed for another 15% above that to about 55% committed and actual on the project. So to now talk about the company's next phase of value creation, there are three different aspects of value creation for the company. One's the near mine, the second is regional exploration and project potential in Cambodia itself, and the third is obviously projects that we may enter into outside of Cambodia. So in the first case, we'll talk about the expansion of the Okvau deposit into a larger open pit initially, and then followed by an underground operations. As previously mentioned, 90% of the indicated resource here actually converts to reserve. The reason for this really high conversion rate is it's only really been drilled to open cut depths. We'd expect with additional drilling at depth along strike that funded from cash flow next year to significantly increase the resource in two main areas. One would be a depth to the south plunging continuation of the ore body, southeast plunging continuation of the ore body, where we already have intersections like 10 at 9.6, 11 at 8.4, and our deeper soil 6 at 9.7, giving us strong indication that there's a potential for an underground development in plunging to the southeast of the project itself. And then more recently, we've identified a vertical north-south trending feeder zone on the eastern side of the pit itself. That feeder zone, we think, has fed the mineralisation at Okvau in the right type of rheology. And those intersections in that vertical feeder zone, in pit, we've got intersections like 16.9 metres at 10.87 grams, 9 at 13.23, 7 at 12.3, 9 at 9.27 grams, etc. Very strong mineralisation, which clearly, if we can follow that zone below the pit along strike, there's potential for underground out of the zone itself, and also wherever that zone comes back in contact with similar geological setting to Okvau itself, we can expect potentially to get repeats of the Okvau mineralisation. Outside of the current open pit, we already have intersections like 15 at 11.92, 8 at 19.98, 13 at 7.16, etc. Very strong mineralisation. The first two of those, the 15 and 11 and the 8 and 19.9, aren't currently in any of our resource models, and we'd expect to be including those with extra drilling over the next 12-18 months. So the second part of that value creation I mentioned previously would be to find more gold deposits or supplementary gold deposits on our regional tenure. We have over 1,100 square kilometres of tenure in Cambodia, 100% owned by the company and in joint venture. We have another joint venture we've actually agreed. We're awaiting approval from the Cambodian government to add that to our tenure list. That significantly increases our ground holding. But our ground already has historical drilling targets on it from probably 15, 16 years ago, including the Samdang prospect, which is only about 400 metres away from Okvau itself. That's got intersections like 9 at 6.6 from surface, 10 at 2.46 from 36 metres, 9 at 2 and 3 at 8.93, and 5 at 7.48, all open cut intersections which sit in the current mining licence and will just be supplemental feed for Okvau as we do more work on them going forward. To the south of Okvau on our Oktung and Prek Long licences, which were recently granted earlier this year by the Cambodian government, we hold those 100%. There's some historical drilling on those from about 15 years ago with intersections like 3 at 8.9, 4 at 10.2, 3 at 12.9, 3 at 8.5, 2 at 13.5 and 1 at 16.2, all open cut depths, obviously giving us great hope that we can find something significant on that project area. Most of those intersections sit within 10 kilometres of the Okvau mill. To the south and west of Okvau, about 75 kilometres away, we have our Snool prospect, which is a 70% joint venture, or we're earning a 70% into a joint venture. That has historical drilling like 4 at 11.9 from 4 metres, 6 at 2.9 from 4 metres, 12 at 1 from 12 and 1 at 11 from 66. We are starting our exploration in that district. We've put some holes into it, and as we get some understanding on the structural controls there, we'll be following up that work over the next 12-18 months. To the north and west of Okvau, we have the Nong Katong prospect. We have a 2.5 kilometre long anomaly in that project in a similar geological setting to Okvau, with peak auger samples of 7.2 grams per tonne, or 7,207 ppb, and rock chips up to 38.3 grams per tonne. So in addition to the near mine and the regional tenure potential for adding value for Emerald, we also have made it no secret that we are looking for another additional advanced development option for the company. Our preference would be for an Australian asset. The reason for wanting an Australian asset is so we could generate franking credits to pay dividends out of profits in the future. We've been a dividend-paying companies in our previous machinations of roles, and we'd like to be one again with Emerald. And it's obviously much easier if you've got a tax base in Australia to do so. So thank you very much for listening to this presentation, and I hope I'll obviously see some of you in meetings as we go forward. I hope you enjoy your conference.